All right, welcome into Market Day Report. I'm Scott Shellady, otherwise known as the Cow Guy. Thank you very much for tuning us in here. I've just received the baton from Mr. Tony St. James. I'm ready to go, but I looked at there's some of these prices I don't like too much. Why don't we get right into it and see what we've got going on? I've got a corn board pulled up here, and we'll take a look at it. That's why I don't like it, right? It's down. March is down 3 1/4 cents to 475.5. We've had what I'm going to call that a 5 3/4 cent range. We're in the middle of it, 475.5. May. That's down 3 3/4 to 484 1/4. You go out the deferreds, so we lose a little bit more. We're down 5.5 cents in new crop D's. 451.5 was last out there, and that's less than 2 cents off the low of the day. So corn on its heels a little bit, trading kind of heavy. Let's move out to the soybeans and see what that's doing for us. Solid double-digit losses there, unfortunately. March is down 20 1/4 cents to 1022.5. 2 1/4 cents off the low of the day, and we've had a 22-cent range. May, that's down 20.5 cents to 1034 3/4. I think you get the hint, but we're about 2 1/4 cents off the low there as well. So that's soybeans. You can see what we're doing there. Let's move on to the wheat in Chicago. That too is lower by around about a nickel. 4 3/4 cents lower in March. Wheat in Chicago, 542 1/4 is last there. I'm going to call that 4 cents off the low of the day, and about 2 3/4 cents off the highs. No, that's wrong. Sorry, 4 3/4 cents off the highs. May's down 5 1/4 cents to 553.5. So we're off anywhere between, say, 4 3/4 to 5.5 cents across the board when we talk about Chicago wheat. From Chicago, let's go to Kansas City and see what we've got going on there. And that's around about a 7-cent loss across that board. Hard red's down 7 1/4 cents in March. 550 1/4 is last there. 3 cents off the lows, 9.5 cents off the highs. May's down 7 cents to 560.5, and we're down 7 cents in July, 569.5. There you go. That's the hard red in Kansas City. Let's go to Minneapolis and take a look at the spring wheat. That's at least a nickel lower. March is down a nickel. 582.5 is last there. That's 3/4 of a penny off the low of the day, and we've had about 6-cent range, 5.5 cent range. Maize is down 5 1/4 cents to 592 3/4. That's the spring wheat in Minneapolis. Let's take a look at cotton. We'll get to our guest analyst. That's going to be down 79 points. Boy, this thing can't rally, can it? March cotton trades at 66.98. All right, let's bring in our next guest analyst. He's with CHS. Is Peter Haralambakis. There he is. Peter, thanks for taking the time to be with us here today. All right, brother, what's top of mind with you? What do you got?
Well, again, you just went down the whole gambit there, and there wasn't one thing that was positive. I think the only thing I see positive out there is gold on the board, right? So a sea of red, and if it's Thursday, it must be export sales day. We did get some highlights for the grains and livestock here. Some of the highlights set at corn sales exceeded expectations, posting a total above 1 million tons after 2 weeks of slow sales due to the holidays. Soybeans bounced back slightly after some slow holiday trade as well. But that rebound wasn't very robust. There was another massive cancellation there on the soybeans to the tune of 648,000 tons that pulled down the total. Wheat posted a total that was above expectations as well. But again, none of this can hold our prices above some of the technical levels, specifically the new crop corn in the DEES 2025. If we slip below 254 for a handful of days here, look out. We might kind of test some of the other kind of lower exponential moving averages from that 200-day exponential moving average of 454. So again, there's a lot happening. There's a lot of noise. There's a lot of jawboning. If you could probably, digest a lot of what other kind of news wires and news, outfits are talking about. So folks are just kind of going to see exactly where some of these grain prices can get to, right? If we don't hold, I don't want to say 428 as another area to kind of keep an eye on some of that with the DEES corn, but we got some support levels to shred through there. The wheat and the soybeans, however, they're still in a sell to rally mode, I guess you could call it. The trend is not your friend when it's going down, I guess you could say it that way. But overall, we're still awaiting kind of how the rest of the Q1 plays out on a global scale, let alone just a GDP kind of outcome, as some of these inflation data kind of funnels in as well, going forward there. So that's pretty much it, Scott.
That's good stuff. I mean, so I'm looking at for new crop DEES corn right now. It's trading around 452, 451 3/4. So we're 2 cents away from that 200-day. You said 454.
Exponential 200-day, 454.5. Correct.
All right, so
we do have some 50-day. The 100-day and 50-day are almost converging around that 443. 445.
Okay.
So I guess that's probably the next. We did have a little plateau there where we can find some support at those levels. Folks are selling corn out there.
Yeah.
There are some folks that are making a move. Again, we're early. We haven't even planted anything, so we're keeping an eye on grain costs or values. We're keeping an eye on input costs along the lines of fertilizer and whether or not those will pinch some of the margin out there.
All right, great stuff as usual. I'm going to take a look at that 454, 443, and then I think you said 428 maybe. All right, so that's those are the targets if we look to the downside. Appreciate you coming on. Thank you very much, Peter. Peter Haralambakis, he's with CHS up in Inver Grove Heights, Minnesota. We're going to go away. We're going to pay some bills. We're going to come back and talk more livestock with a guy wearing a livestock jacket, of course, right? Right after this.